Good morning, welcome to IG's early morning call. It's the midweek trading session, Wednesday, 30th of August. Let's take a look at the headlines as we see a continuation of yesterday's price action where we saw the dollar drop after the JOLTs Job opening data in the States yesterday, paving the way for a softer NFP. We got the ADP today, the private payrolls number, also expected to show a slowdown from the number that we saw last month. Late last night, HP, formerly Hewlett-Packard, was down in extended trade, as indeed was Hewlett-Packard Enterprises, HP revenue missing, and also a lower forecast as we look out from here. And it's been another good day for the price of oil. There's concerns about the potential for disruption with production, possibly disruption because of the latest hurricanes series, and also yesterday the American Petroleum Institute saw a drop in inventories. Take a look at volatility, down for a fourth day in a row, and in fact disappearing below what had I been talking about, this rather loose sort of upward facing wedge pattern. When you get three touches on both the upside support and the resistance lines, you are looking at an upward facing wedge, which is a bearish wedge. Ultimately, you measure the height of the wedge, you get the projection. When you see a projected downside, entire candle was down below that on Monday. We've seen a continuation of this, and you've got a projection around about the 1560 level, which means that people are taking on risk assets, including the London markets doing well in yesterday's session. Surprisingly, we saw the airlines do well in yesterday's trade, despite all the disruption that we've seen because of the air traffic controller issue that's going on there at the moment. But the aeroplane companies are trying as much as they possibly can to respond and get people home at some time, at some point around the country. You can see we're building on yesterday's very strong day in the session in yesterday's trade. And indeed, it's across the board that we've got these strong markets. In today's session, we've seen a new intraday high not seen since the 10th of August. On the German DAX, a recovery from the almost total retracement we saw back on Friday, the 18th of August, and the market moving up. In fact, we've got a red candle there at the moment, but we are technically better off, or we are actually better off than we were at the cash close last night, as we see this market continue to build on the strong session yesterday on the cash trading day. Much of this coming on the back of expectations that possibly now, maybe, the central banks have done enough. I say possibly, maybe. I think people, in some respects, living in hope. I think inflation is going to stay high for a fair amount of time. That's the problem. And don't forget, we're only talking about the fact that prices are up. They're never going to go down again by any substantial margin to take us back to where we were 18 months ago. So people will still have to face higher costs, I think, for time immemorial from here. 73.90 is where we are on the French markets. Very soon, we are going to get this market past where we are in London. 73.90 is where we are, the London market, 74.89. Now, if it does go above the London markets on a pari passu basis, this will be the highest or the closest that we've seen the two markets since the year 2000. Let's take a look at what's been happening across the Asia-Pacific markets as things stand there at the close. The Nikkei was up just over 0.25%. Money going into Hong Kong as well. The S&P ASX 200 up 1.2%. We've seen some monthly CPI data, which we'll talk about in just a minute on the Australian markets. US, let's take a look at what happened there yesterday. Nvidia at a record high, record close again yesterday. NASDAQ leading the gainers. Technology stocks up by a margin of 1.75%. S&P 500 up by 1.5%, almost in the Dow Industrials. Trailing in behind, but nonetheless, it was nonetheless a good day as well on the market. In fact, look at what happened to NASDAQ. I drew this line yesterday because of, in fact, this looks like, I think, in fact, you've got to go back to the 24th of July, was the low point we saw there. So it's been support and resistance at 15,370. A little bit of money down at the moment, but we're still building on yesterday's strong cash trading day, and we're looking for a slightly stronger start to the beginning of the session in today's trading day. I just want to talk about Nvidia because this is one of these stocks we've been talking a lot recently. And we closed at a new intraday, closed at a record high yesterday. The stock closing up with a gain of 4.97% in yesterday's trade. So you can see that's where the markets closed out yesterday's trade. That was a closing record high, not an intraday record high, which we've seen for Nvidia back on the 23rd of August. Let's take a look at what's been happening in other areas of the market. Hopes that the Reserve Bank of Australia has done enough was given to us today by evidence coming through for the monthly inflation data. This is the monthly consumer price data. It's marginal compared to some other inflation data that we are getting through in other in the economy. Let me just quickly show you what's been happening with the Australian dollar. In yesterday's session, we saw the Australian dollar gain a considerable amount against the US dollar. This is mostly because of the money coming out of the US dollar. But in today's trade, you can see a little bit of a reversal on that. So the Aussie down at one point, but in fact, even that's now beginning to fight back. Inflation in July moderating to 4.9%, the lowest level since early 2022. The monthly consumer price index measure showing a headline inflation falling from an annual pace of 5.4% in June, providing some rare good news in the cost of living crisis. Meanwhile, individual German states each report their own individual consumer price data throughout the morning, with a culmination of the expected 1 p.m. UK time release today of the main German state CPI data. Let's take a look at what we're expecting there. Economists forecasting the annualized inflation rate in Germany to fall from 6.2 to 6%, but the risk may be on the upside because of soaring wages, which saw the second quarter wage data climb to 6.6%, boosting consumer spending power, but fueling concerns about inflation being pushed up by rising labour costs. It took German annual wage growth above the country's harmonised consumer price inflation rate, 6.5% in the period for the first time since 2021. ADP payrolls today. It's the private payroll number out in the States. The consultancy releases the numbers at 1:15 p.m. today, UK time. The consensus is for a slowdown from the strong 324,000 we saw in the month of July to a more moderate 195,000. While the report's often referenced as a possible indicator for Friday's non-farm payrolls, don't rely on it. Its track record is less than reliable. But we'll have to see how things go. So I think it's just a question now of waiting until that data is released, and we'll see how things do develop for the Friday release of non-farm payroll data. Now, we've been witnessing a relatively hefty drop in the US dollar after the JOLT openings yesterday, the job openings out in the States that were expected at 9.5 million, which would have been a low not seen since May 2021. In fact, they came in at 8.827 million. Now, what does this mean? Well, it means that the labour market slowed down after accelerating months of unprecedented monetary policy tightening by the Fed. The count peaked in March 2022 at just above 12 million job openings, then gradually slowed to 11.2 million at the end of 2022. Since the slowdown, it's been pretty much constant. The dollar taking the biggest hit yesterday. I want to show you this chart, which is the dollar basket, down yesterday for a second day in a row. In fact, you can see at the moment we are absolutely on this line of support, which was the resistance that we saw twice back at the back end of June and the beginning of July at 103.20. We're currently trading at 103.2022. The dollar hitting that news on the JOLTS numbers yesterday, and this sort of figure reduces the chances of further Fed interest rate rises. So that's why we're seeing a drop in the dollar. Now, as a result of this, we have seen moves in a lot of the major crosses. Yesterday, the euro up above this prior line that we've been watching of the 61.8% retracement at 108.80. It's now trading down a little bit below that. But I think more importantly, it's been a bit of relief for the price of gold. Now, gold has risen over the last couple of weeks or so, and yesterday it traded up and stayed up above the 50-period moving average, and we're currently trading at 1936. This, of course, is the gold price in dollars, which when you get a dollar move like we've had, you get the contrary move in the price of dollar-based commodities because of the currency factor. So, but nonetheless, gold is up, as we see there, at 1936. Now, later on today, we get US GDP numbers out. So this is to some degree kicked into the shadows, I think, by other data that we've got with the private payrolls figure. This is the second reading of US GDP for the second quarter. So it's a revision. The US economy is expected to have expanded 2.4%. This is down from 4%, but we'll have to see how things develop there. That's at 1:30. Also at 1:30 p.m. today, wholesale inventories. And later on at 3 o'clock this afternoon, we get pending home sales for the month of July. I think we've got a graphic there to show you what other data that we've got coming through at 1:30. Don't think we do. No. Well, anyway, trust me, that's out at 1:30 wholesale inventories, and at 3 o'clock this afternoon home sales for the month of July. Let's take a look at what we've got in terms of some of the moves in the corporate world today, and things looking pretty good for Prudential out with the figures for the most recent period. It's a first half number for Prudential. Operating profit rising 3.6% in the first half to $1.46 billion. Annualized premium equivalent sales, a closely watched gauge of insurance sales, rising 37% to $3 billion following the end of China's zero COVID-19 policy late last year. A welcome breather for the group, but the coming months could be clouded by slowing growth momentum in the Chinese economy if that indeed does come to pass, which many are expecting. But it was a good day yesterday ahead of the numbers on the London markets. It trades a lot, or has a lot of business in Asia. You can see the chart here showing us closing at 988, up 4.5% yesterday, ahead of these figures out today. Big question is just how good were these numbers in the context of that rise that we saw yesterday. But you've only got to look at what happened recently to the Prudential. And this stock has fallen very close to, in fact, in the last couple of weeks, it has actually broken this line of support at 943. It did so fractionally on this candle here. We went below on the 21st of August, but since then it's been a little bit of recovery. And as I said yesterday, at 4.5%. Delivery Hero has swung to a profit in the first half. Now, this mirrors what we saw from the numbers out from Deliveroo recently. Group EBITDA, this is a German-listed company, Group EBITDA came in at 9.2 million euros, to be compared with a loss of 323 million this time last year. A performance due to its activities in Asia, we're told, where EBITDS reached 173.7 million euros. In a statement, Delivery Hero said it expects Asia to be the most dynamic of the world's major regions in 2023. Hang on a minute, weren't we just talking about China having a bit of a problem? Absolutely. That could well be a standout on the downside, but it is nonetheless looking for the rest of Asia to do well. Let's take a look at Delivery Hero. As I said, it trades on the German market. It's up for a second day in a row yesterday. Yesterday up by a margin of almost 2.5%. The stock will open at 35.85. If you're long on this, stock goes below recent price action down here at 33.90. Now, HP, all sessions on the IG platform late on Tuesday evening fell in extended hours after missing revenue expectations and lowering its earnings forecast for the full year. I think it's the right thing to do to start off on where we were as at the close last night. You can see we were pretty much at the bottom of the candle, meaning there were no buyers in this stock, down 7.73% when all was said and done. For more than a year now, HP has been battling with a slump in the PC segment. Inflation and uncertain global economic activity triggered a decline in demand for consumer electronics. Chinese demand, a key market for HP, is also sluggish. Over the past few months, PC shipments to China have dropped 19% in the past few months. All this led to a recovery in inventory across the supply chain. Earnings at HP coming in line with expectations at 86 cents a share, helped by controlling cost measures, but revenue falling 9.9% to 13.2 billion, missing estimates of 13.37 billion. Now, HP forecasts adjusted earnings per share to be in the range of between $3.23 to $3.35, from earlier expectations of $3.30 to $3.50. So a reaction negative on the markets late last night, all sessions on the IG platform. Meanwhile, the company that was spun off from the old Hewlett-Packard, HPE, this is Hewlett-Packard Enterprises, also releasing quarterly earnings last night. It too fell by a smaller margin of 1%. It's not an all session, so I won't show you the chart, but I want to show you the numbers as they came through at late yesterday. 49 cents a share, 2 cents higher than forecast. Revenue broadly in line with estimates at 7 billion, but concerns again about the outlook really concerning traders and investments. Now, oil is up at or around a 2-week high. There are two factors affecting the oil price. First of all is natural. The second is as a result of the American Petroleum Institute figures out yesterday. Investors increasingly worried about Hurricane Idalia, which is churning over the Gulf of Mexico. According to the EIA, the offshore Gulf of Mexico accounts for about 15% of US oil output and about 5% of natural gas production. Later in the day, as I said, the API came through with some numbers, which we can have a look at now to show you what's been happening. The Institute reporting 11.5 million barrel fall in crude oil stocks when analysts expected only a drop of 2.9 million. Gasoline and distillate stocks rising respectively by 1.4 and 2.5 million barrels. But you can see if you look at US crude, relatively strong day yesterday. In fact, today we're building on that. Currently trading 81.42. The market's right in the middle of this band between 78.54, which we've got drawn on here from the low point we had back on the 3rd of August to the high we had at 84.40. Also, remember the SPR, Strategic Petroleum Reserves? In March 2022, the Biden administration decided to release reserves at a rate of 1 million barrels of oil per day for about 6 months to bring prices down. At the start of the year, it was announced that it was time to gradually replenish reserves. On Monday, the Department of Energy said it added another 600 barrels to the reserves. SPR is still sitting at a 4-decade low, and at this rate, it will take around a decade to come back to 2021 levels. Now, Crypto One, SEC, nil. That's the latest report from that match that continues. Yesterday, a federal court ruled that the US securities regulator was wrong to reject an application from Grayscale's investments to create a spot Bitcoin ETF. The judges reported yesterday, they said the SEC failed to fully explain its reasoning when denying Grayscale's product and should review its decision. And it was a good day on the markets yesterday for Bitcoin, with a rise on the session, on the trading day, taking us back up above the 200-day moving average. But in fact, in today's session, we've got a little bit of money on the way down. Grayscale's CEO called the court decision an historic milestone for American investors. As for the SEC, it said it was reviewing the court's decision in order to determine next steps. It has 45 days to make an appeal against that ruling. Now, for a lot of investors and traders, it's not possible to expose your account to Bitcoin. So let's take a look at a proxy. This is the investment for Coinbase, the world's largest online exchange for cryptocurrencies. Big day yesterday. All sessions on the IT platform closing up with a margin of 15.74% at $85.2022. That's it. We're back at 10:30 with Charting the Markets. Hope you can join us there for that. Do watch out for Prudential at the start of today's trade here in the London markets, and Delivery Hero on its profit. After a big loss this time last year, it's now returned to profit. So that could also be on the move on the German markets. Looking at the moment, at least, for a stronger start, certainly here in London. Maybe not now necessarily on the German and French markets. We'll have to see how things go, but certainly positive in London.